Oh, I'm going to upset people with this one. Recently, I put out a poll on Patreon asking what company do you want me to review next on the channel, and it's no surprise Pinterest won this poll. I was really hoping it would be AMC or NIO, but no, it is this company, and people are not gonna like this video. But nonetheless, I am here and I'm gonna give you a full breakdown of Pinterest, ticker symbol pins, and what I think you should do with it. And full disclosure, I don't think you should do any with it. I think this company is an absolute bag of shit. However, I am a man of the people, and it is my solemn duty to lube myself up to the eyelids, put on those red panties, and be prepared to give Pinterest its first ever STI. Now look, I know this company has bags of potential and has grown exponentially in the past, but that might be the past, and we'll talk about in this video as we give a full breakdown. I really don't want to be sit here saying I hate this company because, well, I don't. I just don't think it's good value, and we're going to talk about that in this video. So that's all you wanted to get. If I'm bullish or bearish, you can click off this video right now. Just please hit the like button on the way out because it massively helped me out. So we're back with another STI video, and no, I'm not talking about the bumps and rashes you have downstairs. This is the stock ticker inspection series where we give a full breakdown. We talk about the chart, the fundamentals, and the future news of this company. And Pinterest is definitely a growing company with 454 million active users month by month. Surely this tech company is going to the moon and never coming back. No, there's more to this story. But before we get into that, imagine a world where you have a broker that doesn't charge you to buy Pinterest, a broker that will also give you access 24/7 in some cases to this guy with a beard. Well, this broker does exist, and if you signed up with eToro on the pinned comment, deposit, make a trade, you get lifetime access to me and our chat room for life. All you have to do is sign up via the link on the pinned comment. Now, fundamentally speaking, let's have a dive into Pinterest. And I hope I'm pronouncing it right. Is it Pinterest or Print? I don't really go on this app, I'll be honest. I think my wife goes on it from time to time, so maybe she's in this statistic of 400+ million users. But their market cap is $37 billion US. Simply Wall Street thinks it's 2% overvalued, which to be honest, I think is more like 80% overvalued. And if we look at the PE ratio, holy hell potato, 226 on PE. And if you don't know what PE, long story short, in theory, the better value a stock is, the closer to 1 it is. And that is one of the highest PEs I have seen in a hell of a long time. Now, I know the keyboard warrior is going to be going, PE doesn't include growth. Well, let's have a little look at the PE to growth ratio, and that is still 5.5. So including the growth of the company, in theory, for every $1 of value, you're paying 5.5. If you went to buy a beer and it was 5.5 times more expensive, would you buy that beer? Probably not. But it is good news on their assets and liabilities. They're well covered. Their short-term assets is $2.66 billion US with a liability of $237 million, well covered, and their long-term assets are $221 million with liabilities of $114 million. So they're well covered on their assets and liabilities, but there is a hell of a lot of insider selling, which is another big red tick. The insiders have been dropping this company like it's hot. Even their CFO, Todd Mongenfield, and I don't know why I said it like that, but he sold twice in the last year alone, and there has been zero, and I mean zero, insider buying into this company. TipRank's top analysts, and if you want to access TipRanks, there's an affiliate link for it down in the description, but TipRanks have 16 buy ratings from their top analysts, 6 are a buy, 10 are a hold, 0 people are saying you should sell this company, which is a good bullish signal, and their 12-month price target combined is $71.4 US, which would represent a 21% growth from its current price at the recording of this video of $58. So on paper, it's not that bad. Other than the PE and the PEG ratio, this actually looks good. Analysts like it, their liabilities are good, and their market cap seems good. Why don't I like it? Well, my big concerns really lie if you look a little bit deeper. Their profit margin. Most tech companies have really high profit margins, especially ones that are social media. I mean, think about it. All you got to do is build a platform, pay people to run it, and keep it live, and all the profit should come in. Their profit margin is pretty damn horrific, and they've only got profitable to it recently. Their profit margin is a measly 7.18%. And even though the growth in this company is crazy, their revenues quarter by quarter are all over the shop. They've been declining since the last quarter of 2020. Why is this when every other tech company seems to be rocketing to the moon? Well, I think it's that people are back at work and not using this company as possible, and we can actually see that in the data itself. Its monthly users are down again 5% from the previous quarter, so this company is actually slowing down rather than ramping up, when most other companies seem to be growing. Another bad thing is they are actively diluting you. If you go in the last 12 months alone, they've added over 5% of shares to their float. So if you've got a pizza and you're all sharing it, imagine someone just coming and taking off 5% of that pizza without you even having a say in it. That's basically what they're doing. You now have less pizza to enjoy on Netflix and chill night. Their net income last quarter was profitable at $69 million US, but last quarter, remember, they did lose 21 million, which doesn't add up because this company has a 37 billion market cap and they're only making 69 million a quarter in the best case scenario. This really doesn't add up to me. I'm sorry. That does not seem like fair value. I mean, if you think about it, a 37 billion US dollar company, what should their profit margin be and what should their revenues be quarter on quarter? And I know stocks are forward looking and we'll come onto that in just a second. But if you bought Pinterest right now, you are paying a crazy premium if you go off their revenues at this moment in time. Especially when you add in that their short-term user growth is actually declining, not increasing. I mean, if this company was growing 20% every quarter or even every year in terms of users and people on their platform, I'd still struggle to justify it, to be honest, but it's going the other way. I mean, I just can't understand how a company that is valued this highly with really bad revenues like this, really like volatile as well, it's up, it's down, it's like this, and they're valued at 37 billion. I mean, it does just scream out it's way overvalued. I mean, if you bought Pinterest right now, you're basically paying a super high premium for a company that's users are actually declining in the short term, and their revenues are all over the place. I don't understand why you'd buy a company like this and say, I'm going to hold it for 10 years. Because in 10 years, yeah, maybe it will go up. But it's not just that. There are other companies out there that have good valuations right now. Why would you just buy Pinterest, even if you just like the platform? I just can't fathom it. I'm sorry. So in terms of value, I know I'm beating it up. I think this is absolutely horrific. But where should I buy it if the stock does calm down? Well, if we look at the chart since its IPO in early 2019, the stock is still up 150%, which is a crazy inflated figure. And its all-time highs, which happened not so long ago, it's down 35% from then. And the chart, if you look at it, if anything, although it seems there is some support at this 55 level, it just looks quite bearish to me. There's a lot of people trapped, and I really don't think that this stock is going to rip up soon unless it does get a sort of meme craze squeeze. For me, really, I won't consider buying this stock unless it falls like 60, 70, maybe even 80%. Now, it might sound harsh. I know there's going to be some keyboard warriors down in the comments who are asking their mum for allowance money still, saying it's never gonna fall that far. And you're probably right, but I buy value, and that's the difference. If it doesn't fall there, cool, I'll never buy it. But for me, if it did go down that far, I'll reassess the situation and probably still think it's down 60, 70%. Why? Well, it's because no one's going on that platform, or even less and less. So in that case, cool, I look for another stock. It doesn't mean I have to buy this one stock we're talking about here. There's literally thousands of stocks you can buy. Just because you know the name doesn't mean you need to buy it. I have invested in many companies I have never heard of before I started researching them. Companies whose products I've never bought before. But really, folks, this is one of the most overpriced stocks I have seen in a hell of a long time. So if you are buying it and you don't want to listen to me, that is completely fine. It's not financial advice anyway. This is just my personal approach, and I do not think this is good value right now. And it might go up in the future, and if you're buying it, I really hope it does. Best of luck to you. If you want to see what I'm buying and selling, though, you can check out Patreon down in the description. We have a WhatsApp group and a chat room, and you can see what I'm buying and selling as it happens. Check it out down in Patreon. If you haven't done so already, please do smash that like button. And of course, the code word for this video is pins. And we're talking about the legs, not this stock, because this stock absolutely sucks. See you in the next one. Take care. Peace.